afternoon, you dirty cat-eating cannibals, and welcome to all my new subs from today. I mean, this is truly the Kane effect. I've been grinding my channel for about a year, just putting out educational content for traders, and in one measly retweet, my man puts up, there's a 25% spike in subs. Truly blessed. Kane is one of my original mentors with trading. He's the one I've been watching and studying for many years now. And to all the new subs that came through him, just be ready to be mistreated and verbally abused on my channel. I have a general disdain for everyone who follows me. Jokes aside, we're gonna look at, this is actually a continuation video of the Aptos setup from the other day. We went over a pretty decent setup, so I'm going to go through multi-time frame what I'm seeing and essentially where I want to enter the long. I have it on my other monitor right now just because we might actually have a setup today even on Futures Open. But here's the 3-day. 3-day to me looks like a very clean range. You could see relatively equal highs, relatively equal lows before the manipulation down. So you can see they stop volume here above this low, basically trapping front side longs and then using them as liquidity for the actual reversal. So this SFP setup is usually a pretty good indicator of a high time frame reversal if you can basically roll through all the time frames from weekly down to 1 hour, and that shows up as an SFP. That's a good sign. So I think this is going to be the bottom for now. And what you're looking at trying to do at this point is pretty much jump into the long at areas on the extremity in the lower time frame. So obviously you could long on the weekly, but your entries matter. So I'd rather get in on the 5 minute to 15, let's say. And if the market is truly fractal, the symmetry of this chart should look good either way, whether you flip it or not. So you could see the relatively equal lows, in this case relatively equal highs. They would be pretty much the same thing I'm looking for. Eventually this is our draw, and I'm looking for this to get taken out on the high time frame. So we'll just drop it into, now we'll look at the weekly setup and then just kind of scroll through each data point. So on the weekly, you could see it was a weekly SFP taking out this entire internal range. So all the stops got taken out, and then again on the 3-day it rebalanced the majority of the 3-day inefficiency over there. So on the weekly, we're looking at the weekly external raid. Your next target is likely going to be the weekly internal right up here. Going into it, you have on the lower time frames, you have a bit of a liquidity arc forming where you have relatively equal highs here, and then a huge liquidity pool there with a bunch of swing failures on the way down. So these are all going to be, I mean, I'd imagine once you get into this range, there's going to be a low resistance liquidity run. And again, probably up here into the weekly. So that's the weekly setup. And in the daily, what I'm looking at is a market maker model. So if you look at this here, we have a original consolidation up top. Some of my assets went missing. Hold on. Yeah, I'll show you this in more detail, but the idea is this is our original consolidation. You have your first distributive leg over here after this displacement, and then you have more distribution here into these lows, and then one last distribution taking out basically the remaining stops until your buy program is activated. So essentially below this low, the external low, you'll have a passive bid waiting below that. And what they're doing is basically getting people to commit their liquidity on the front side here and then purging everyone below this low. So this is where you get order pairing and basically early longs or impatient longs puking their position before the actual reversal begins. So a lot of coins exchanged hands there. So then on our 4-hour, we have a 4-hour range. They left equal highs. So what I'm seeing is basically a 4-hour market maker model within the daily. So you could see this was our final raid of all these swing failures. Sell side liquidity taken. This is where your buy program is activated. If you then drop the time frame, because it's a 4-hour model, we're time frame aligning it with the 15-minute. You can see this 15-minute order block getting respected over there. That was your low risk buy, essentially. And now you're basically in one giant final accumulation before the run up. So this right here, where these two equal lows got purged here, that was your continuation purge, and now you're probably just going to run up to the highs and take these out. So that's your 4-hour. Going back into the daily market maker model that's printing. Up here you had your low risk sell on the again, from daily I like to go into the 1 hour just to identify where that would be. And it's essentially when this last low that rated the high and then shifted below, you're looking at within this stealing range where the entry was. Depending on 15-minute, 30, 1 hour, there's a whole bunch of potential entries there, but the one that was the actual low risk sell was when they nuked these highs and then started shifting below those lows. So then you again had another purge here, rebalance, and continue down. So that was your beginning of the sell program. And again, you could see very clear levels of distribution, right? So you have this Starvis box, one more here, and then the order pairing below the external low. So your low risk buy in this case was in this daily imbalance below these lows. You could see they basically purged all this sell side, rebalanced here, and then started moving up. So within this range, I'm actually looking for a low time frame entry. Damn, where did it go? All right, so here's the 4-hour. So you can see there's 4-hour lows within the range, just below the value area low right here and below the anchored VWAP from the low. So essentially you want this reclaimed. It's holding and it's pinched between the two right now. But what I'm expecting going into the week on this 4-hour is now that you have these equal lows in the range, one quick wick into here where you have your final bit of demand. So basically this whole fractal right here, this was an order block, but again they've only filled the top half, so I'd imagine there's going to be a resting bid waiting below that as well. And all I want to see in this range is a quick wick. So if we just look at this, this is essentially the setup for today or tomorrow depending when it comes, but I'm using the volume profile within the range. So basically within this session, from this session high to low, you can see your value area low kind of lines up with the demand. Then if you extend it for the whole 4-hour range, between these relatively equal highs and the low of the range, you could see that the volume is traded right here and we're below it. So we're likely going to get a retest of the value area low just to confirm. And in that same range, we have the equal lows. So I'd imagine there's going to be a purge into demand. And what I want to see is an immediate reclaim of the value area low right here. And that would be the trigger to go long. So that's going to be the setup. And then if we zoom out, it's basically, it would only be a wick. And for it to be a valid entry, it would have to be a wick and immediately get bought back and go back into the value range and start reclaiming the anchored VWAP. So as it starts reclaiming the anchored VWAP, I'm going to start just bidding as it goes green. I'm not worried about buying higher. I just would rather have confirmation in the range before I start going ham with entries. So going back out, Here's your daily. If this is our daily market maker model, we're trying to enter on the 1 hour. So if we go back into the 1 hour, that's essentially going to be this purge, right? So these 1 hour lows, you have a whole bunch of liquidity to rinse before we get in. So that's going to be the entry. And your targets for the trade are going to be very clean as well. So because we took out the external low on the weekly, we're then looking for weekly targets somewhere in here. If you time frame align the daily to the 1 hour, you're looking for the 1 hour manipulation to project out where this could go. So your last push up right here to rebalance that 1 hour candle before manipulating down and taking out the external lows, you're basically going to fib out from the low to there, your standard deviations, and then the 2 to 2.5 should be aligned with some form of liquidity. And you could see just above the 2, you basically have all these failed swings into this high, and then these right over here. So somewhere between the 2, 2.5, that's going to be your 1 hour target. Your daily target is essentially going to be from the 1 hour, the daily manipulation, which started over here, that took out these highs, rebalanced the daily candle, and then flushed the external low. So projecting out from this wick low and anchoring to the high of the manipulation, you have your 2 to 2.5 in this weekly internal. So you have basically the extreme of the 1 hour move goes to the -4 standard deviations above these highs into the weekly, and then on the daily you have your weekly imbalance right here between the 2, 2.5. So you have very clean targets on both the 1 hour and the daily market maker model. So the idea is you just want to get a nice bottom entry over here and then ride the swing all the way up until it eventually purges the original consolidation at 1937, which is aligned with this high. So I'm expecting the 3-day range to have an SFP if we get to that high. Again, if you're in the position from the low, you're only anticipating it, but if things are that bullish by the time it gets up to here, what you really want to see is once it goes into all-time highs, you want to see it not pause, but like basically a consistent bid, like a TWAP going out of the range. If you start seeing a pause here and then there's no consistent bid, then I would look for a range to consolidate and then manipulate and then go back down. And that's how this SFP fractal would form. So those are pretty much the two high time frame things I'll expect at the high of the range. Down here, we're just trying to go long. There's really no reason to go lower. And the reason I say that is whether you're looking at the weekly or the daily, the internal low here was already taken. So this should behave like a protected low. If it gets to this level and starts, displacing below this low, then the whole market is corrupted, right? And then just pack it up. There's really no reason for it to draw down there. The real drawn liquidity for all time frames is going to be higher. So anyway, enough shilling this coin. I just wanted to give the technical setup. It's very clean. Welcome to all new subs. I'll be putting out videos a few times a week of only the best A+ setups, and then doing trade review on the weekend. Welcome guys, and enjoy the channel. Cheers.